Do you know how to select a lender when purchasing property? Do you know what's a pre-approval? Why it's important? Or how to get one? If that's the case, you're in the right place. In this video, I'm going to talk about the fourth step in the home buying process, and that's selecting a lender and getting a pre-approval. What's up guys, I go by Sir O'Neal, aka Working Man T. Troy, and I bought my first home and multi-unit rental property in Brooklyn, New York by the age of 26. And I created this YouTube channel so that you can do the same. The fourth step in the home buying process is selecting a lender and getting a pre-approval. The lender is the bank or the mortgage broker that will provide you with the loan to purchase the property. A pre-approval is simply a pre-qualification for the home loan. This means the lender is willing to approve the borrower for a mortgage up to the amount that's stated in the pre-approval letter. For most property, you will need a pre-approval before any real estate agent is willing to show you the properties, even though by law in certain states, they are not supposed to do this. They do this because they want to make sure that you're seriously looking to purchase a property. You're not looking at any homes that you cannot afford to purchase. When selecting a lender, it's important to shop around because each lender might offer different financial incentives for you doing business with them. Some lenders might offer down payment assistance, closing cost grants, or other state-sponsored programs. Others might offer a lower interest rate, which is very important because that can save you a lot of money over the life of the mortgage. Especially at a time like this when interest rates are at historical lows. I recommend finding around 3 lenders you want to work with. When shopping for a lender, you want to compare their interest rates, see if they have programs for first-time home buyers, ask what grants they offer, and what are the requirements to qualify. A good rule of thumb is to check with big banks, local lenders, and credit unions to see which one is more competitive in your area. The lender should help you decide which loan product is best for you based on your financial situation, but you have to do a lot of research on your own. For instance, in my situation, I had to search high and low before finding the right lender. After literally spending 4 weeks and coming across many great first-time homebuyer programs, only to find out that I didn't qualify for any of them because either I made too much money or the programs are only available to borrowers who are purchasing a 1 to 2 family property. Not to mention, for certain programs, they wanted me to move all the way to Timbuktu just to qualify for the grant. I was starting to give up because the guidelines for a lot of these grants was so strict, it was getting ridiculous. I remember even speaking with Citibank's mortgage department on the phone, begging them to waive one of their requirements so that I can qualify for their first-time homebuyer program. I spent hours on the phone and even speaking with the manager, but it was not happening. They would not budge. All because I was purchasing a 3-family property and their first-time homebuyer program is only available to people who's buying a 1 to 2 family property. After weeks of searching, I came across a state-sponsored loan called Sonny Mae FHA Plus program. Sonny Mae stands for State of New York Mortgage Agency, and it offers low-interest mortgage loans and programs to help qualified buyers purchase their first home. Sonny Mae's FHA Plus program is a mortgage program that combines 30-year fixed-rate mortgages with Sonny Mae's down payment assistance for both first-time home buyers and previous homeowners. If you're still watching this video up until this point, please smash that like button. It helps out the channel greatly. The cool thing about this loan is that the down payment assistance can also be used to pay for the closing costs, which is exactly what I did and paid $0 at closing. I found the lender on the Sonny Mae website and I reached out to him to ask to get a pre-approval. When getting a pre-approval, it's very important to ask the lender not to run your credit because this is not the time for this to be done. You should only allow the lender to run your credit when you're in contract and you need to lock in your interest rate. To be in contract simply means that you submitted an offer to purchase a property and the seller accepted your offer. To lock in the interest rates means committing to the lender and having them run your credit to see the true interest rate you're approved for. Because the pre-approval is the lender is only going based on the information that you tell them, so the rate is just an estimate of what's offered based on your financial information and the rates around that given time period. Most lenders actually don't verify your financial information until you're ready to lock in your rate. Personally, I didn't really commit it to a lender until I was in contract. Given that the pre-approval is simply an estimate and I didn't know what the actual rate was going to be when I was ready to lock in, I decided to do some research and select the top 3 lenders who were offering the best deal. I only got a pre-approval from one of them, which I used to show to real estate agents so that I can look at different properties. So while I was looking at properties, I was actually in contact with each lender to negotiate the closing cost credits, grants, and other incentives that they can offer to reduce my expenses at the closing. The reason I did that is because the first time homebuyer education class that I took really taught me that in the homebuyer process, you don't get what you deserve, you get what you negotiate. So some lenders flat out didn't want to work with me, but I was cool because I knew I had a 799 credit score and a good income, so I was going to find a deal eventually. After I found a place and I was in contract, I submitted my documents to my top 3 lenders and had them run my credit so that I can find out what the actual interest rate was that they were each offering. They all gave me a loan estimate, which is a document that outlines the details of the loan. So when comparing each of their loan estimates, I looked at every single detail on that loan estimate to see exactly what they were charging me for. I especially paid attention to the interest rate and the annual percentage rate, aka the APR. The interest rate is simply the cost of borrowing the principal loan amount that the lender charges. The rate can be variable or fixed, but it's always expressed as a percentage. APR is the interest rates plus additional costs such as broker's fees, discount points, and some closing costs expressed as a percentage. APR is used to measure the cost of the mortgage. So you want to keep a close eye on the APR and make sure you're not being charged an arm and a leg for miscellaneous closing costs. Some people might think I'm crazy for recommending selecting a lender and getting a pre-approval before even looking at a property. So I think it's better to do this because it'll help you to not look at a bunch of homes that's basically out of your price range. With that being said, I think that's enough information on getting a pre-approval and selecting a lender. Thank you guys so much for watching this video. I really appreciate your support. Please don't forget to like, comment, and subscribe. Thanks. Peace. 1.